Hey everybody, it's Brooks and Sterling and Ashley from AgriSompo North America. And if my background seems a little different today, I am in the Atlanta airport. Bob Haney and I have been out in Washington, D.C. this week, and my 2 p.m. Thursday flight turned into a 4 a.m. Friday flight. And so it's been an early morning, and I'm on my way back to Evansville, Indiana. Hopefully I can get back there. I'm going to leave my background there so you guys can see the like a reality TV show. I actually had an arrest behind me earlier today, so there's never going to be a dull moment. WASDE is a reality TV, in case you wanted to know. So Sterling, we got about 15 minutes until we get this released. Something new in this WASDE report in May. Trying to throw some new crop numbers at folks. What kind of numbers are we going to be looking at in this report?
All right. Well, let's go ahead here and share a screen, and we'll get those numbers right here for everybody.
Still got a few people hopping on. Glad everybody could join us today.
Yeah. So what we are expecting today, first number we're going to talk about is ending stocks. And there's a lot of moving parts here. Make sure you read today's DMO because I'm going to get all those moving parts in place. But last year, our ending stocks was 1.342 billion bushels of corn. This year, the current guess is 2.1 billion bushels. Meaning we are moving from what is a bullish and supportive supply of corn domestically to a much more burdensome supply. And
let's talk about that for a second here, Sterling. That 2.1, I mean, that seemed unfathomable not very long ago, especially 8 months ago. Some factors in there. I'm going to throw a couple out there and have you give some color on them. Number one, Ukraine supplies a little bit more than expected. Number two, China largely absent from the market here as of late. Can you give us some detail on both of those?
Yes. One, we're seeing more corn come out of Ukraine than expected. We can't guarantee that in the fall. That's the first issue. The second issue is we got a lot more corn out of Brazil. A lot more, like to the tune of 9 million tons more. So that has taken China back out of the export corridor. In fact, for the old crop version of the report that we'll get today, I lowered my export numbers again for corn. Now, where we get to this 2.10, we got two things here that are going on. We're going to move to the production numbers. The average guess for the yield for this report is 180.8 bushels. You can see down here where AgriSompo is, I used 181.5. That is the Outlook conference yield, and that is traditionally what they plug into this report. The very highest...
Let's talk about that 181 for a second, and as it relates to the start that we've gotten. I mentioned we get a claims report each week, and it certainly looks like our overall number of claims are lower than they have been over the last 3 years. Now, if you're an adjuster on the call or an agent in the Southwest, don't shoot me for saying that because there are a lot of wheat claims coming in. But as far as prevent plant and replant, we've got pockets in the Great Lakes regions and the Southeast regions, but it looks like we've gotten off to a pretty good start. That good start's probably reflected in that 181.5. Is it, Sterling?
No, it is not. This number,
wow.
181.85, is a February number. It is a synthetic number. Not 1 ounce of corn had gotten planted. This is the USDA trendline yield. The highest January yield we have ever gotten is 177 bushels per acre. Okay?
So there's a couple things as we talk here, a couple things you've mentioned that I kind of try to pile up an optimism pile, especially in the middle of a sell-off this year. But you said something earlier, Sterling. You said there's not a guarantee of that Black Sea corridor corn coming through, and we don't know anything about that yet, but it's certainly something to remember. This is key, though. What Sterling just said is key to remember when it comes to the volatility period of June and July, probably even in May. But
Yeah.
But tell us, is that likely? Is that 180.8 or 181.5 likely?
That is an extremely high bar. To get that, we're going to need weather like Sandy Koufax pitching on his best day. We are going to have to hit the corners everywhere, and that is going to be tough to do. Now, every Monday, I sit on a weather call. I don't want to pump anybody up with optimism, pessimism, or anything else. Remember to market your grain as a business. But we have shifted from an El Nino into a neutral, and we may be in a La Nina by the time we get to the fall. However, there is a weather anomaly developing in the Pacific Northwest that can lead to blocking high pressure. What that is, we called it at the Board of Trade the Dome of Doom, meaning we get large amounts of high pressure that turns everything, let's say, from Grand Island, Nebraska to Columbus, Ohio, from Minneapolis to Houston, dry. There is a possibility that this could happen. And this was a weather analogy, and the number my good little meteorologist threw at me was the year 2012. I'm not saying it's going to happen. I'm saying it is on the table.
And those weather events are going to be on the table for the next 90 days. Whether it's this one, whether it's another threat, they're going to be there, and they're going to cause extreme volatility. Now, Sterling, May 20th, in the last marketing meeting that we had, you talked about the significance of that week of May 20th and the fact that we don't have a lot of track record on Chinese purchasing of corn. But that is something that could potentially spark the market if we see a surprise purchase of Chinese corn. What are the odds? They've done it the last 2 years.
All right.
What are the odds?
Well, we had those good Chinese initial purchases a few weeks ago. They bought those as coverage. They canceled those purchases. Those are gone. I'm not saying China can't come in here and buy any corn, but I wouldn't get my hopes up. We have seen
it would be just something. It would be kind of addition, though. The market is not anticipating these, but if we could see them step in at all, it would be a very pleasant surprise.
Right, and I'm going to temper that with watching Chinese demand for a lot of other things that I follow, like crude oil, like aluminum, like copper, things of that sort. We were looking for a big Chinese return to the market, and if you've watched crude oil prices, they've not been going up. That's because China has not been in here buying. There are plenty of beans and plenty of corn in Brazil. And I'm not saying they're not going to do it, but it seems less likely since they just canceled those purchases. We are also behind on new crop purchases. So while the yield story is a very high bar to reach at 181.5, the USDA has exports for next year. I haven't seen the report yet, obviously, but the Outlook Conference was at 2.2 billion tons. We aren't going to do that this year. In fact, we're going to be lucky to do 1.8, and it could be less. Who is going to buy those 400 million that we're going to need to get to that number? That's the next question. So, while yes, I think yields will be lower. I feel pretty comfortable with that. If we don't get that boost in exports, that's going to leave this idea where our ending stocks number, which right now is at average guess is 2.10, that's going to put that corn right back into the place, right back into the bucket. So we have a lot of moving parts here going on.
Tremendous number. Let's switch to soybeans as we get close to 11 o'clock here and converse to corn. We've got strong soybean demand across the board. It's maintained itself very well. Tell us about those 292, 228, and 371 estimates there.
Okay, this is the average guess for ending stocks of soybeans. The average is 292. Last year we were 210. It's a lot tighter. So, only 80 million bushels. I put soybean ending stocks. My guess was actually at 272, a little bit lower. We have very strong domestic crush. We have very strong crush margins. New crop crush margins are fabulous. So, that being said, the demand for the soybeans is going to remain stout. We also have this new dynamic of soybean oil being used in biodiesel, and we've had these very much elevated soybean oil prices, which contributes back to food inflation because all sorts of packaged goods have soybean oil in them. The yield numbers that people are guessing on for this for soybeans right now, the Outlook conference came in at 52. Last year we were at 49.5. Getting something close to 52 isn't that big of a reach. We can do that. Soybean yields are much more consistent.
It
So,
seems as if outside of some pockets in the country, there was I think, really a fundamental move to planting early soybeans. If you're on here and I tend to use that chat button and let me know if you agree with that, where beans planted typically early in your area. I know maybe in the I states and in Ohio, there's some parts of Indiana that are a little bit behind. Ohio, maybe a little bit behind. Illinois and Iowa. I was shocked at how quickly we put soybeans in the ground out there. It looks like they went in early. So, to your point, 52 possible? It is possible.
yeah, or we could end up a little under and maybe we find some more acres. If we continue to see corn, really sagging here, especially new crops broken through some key support levels, we've seen the same for beans. Maybe we buy a few acres there in the margins, depending on how planting weather goes. And well, around here, we got off to a little bit of a rough start 2 weeks ago, but last week it was going great guns, and there's a chance that water may fall from the sky tonight, but I wouldn't count on it. And any precipitation we're getting is sporadic thunder showers. It's not a nice soaking rain. So I would suspect with the forecast next week, we are going to see a lot of progress in this area.
Yeah. When it comes to how farmers decide what to plant, I know this is not scientific, but traditionally in a lot of the parts of the country, we planted corn first, and corn seemed to be going in the ground well, and your planter was functioning like it should. You planted an additional 80, maybe 100 acres. In a lot of parts of the country, folks are planting these beans first right now, and I can't help but think that same mentality holds through. If they're going in well, if your machinery's functioning well, you continue to plant a few more. So we'll talk about that in June whenever we have the acreage report that comes out. But I think there's a consensus out there that the 91.99 million acre corn number might be a little overstated. Maybe that B number comes up a little bit as well. So good point, Sterling.
Yeah, that is one other thing that we need to watch closely. This is a chart of new crop corn, and as you can see, we have been descending. And we had, an area where we were able to attract buyers here, but as you can see, we've leaked through that. Now, when we move to new crop soybeans, 1250 was the magic number, and we went through that, and we've gone through it good today. One possibility is there's always, the sell the rumor, buy the fact, or buy the rumor, sell the fact. That sort of situation can come into the market. Both of these markets are oversold. There's a big growing fund short position going on in the corn market, and they've added noticeably to the new crop short position. We've got prices pretty good down here. If you sold it, a little bit ago. So we could see some covering if there's a surprise number coming in somewhere or something that doesn't really shock the market too terrible much.
Sterling, you mentioned that spec position, and a lot of our folks on here remember the old action indicators that used to be broadcast, and we likened that spec position to a fuel tank. If it was above that medium point, it was full. If it was below, it was empty. We've been full for a number of years, and other times a great time to sell, not a good time to buy. We're starting to take that fuel tank down below into closer, not too far down to the E, but we don't have a full tank anymore. And so, as Sterling talks about, there's a little bit of room for buying there.
And one other thing, we are out of the free money era. So index funds, which I don't talk about too much because they don't really change that much, we're not seeing as much general buying in commodities, which is a little bearish. However, on the other hand, when we do not have that free money sitting around, the amount of positions that funds can take on the short side is also curtailed just as much as the buying is. So they may not be able to drive it as far in the ground, and the risk managers are maybe a little bit tighter about things. So that is, a couple of things that we can think about here um, going forward as potential variables along with the weather. That obviously we are going to be all about the weather this year, I think. And we're
Regardless
about
of when and how much this thing might rally in the next few months, I really think we have to look at, especially on corn, adding to some hedges, at least placing some floors. There's going to be a time for that. It's not right now. The market is telling us it is not a good time to be a seller right now.
And we are live, and we are bigger than expected. We're at 2.2 billion for corn, noticeably higher than expected. Exports came in at 2.1 off of that, so that was a little bit of a change from the Outlook conference. The soybean ending stocks bigger than expected at 335.
That's a
Big
high.
number
That's a
for
high
there.
guess.
Yeah, that's on the very high side of this, and this 222 is on the high side of things as well. Ideas for, let's see what else we got here. We've got cotton ending stocks at 330. That was actually kind of on the low side. The cotton market has been stuck in a range for 7 months. Wheat at 556. That's actually a little bit lower. I think I was the lowest guess for wheat, and I was off by about 20. Let's see, soybean. Let's see what we got here for corn. Corn production. What else we got here? Oh, saying this is the worst day of the year for grabbing things out of reports because we have so many different items. Let's see here. We need corn yield per acre.
I think it was 181.5 if I saw it was up just a little bit, Sterling, at the top of your screen.
Yep, there it is, 181.5, in line with the Outlook conference. So again, that was that big number that we were looking at. Soybean yields 52, again, right in line with the Outlook conference. Wheat yield at 44.7. That's actually a little bit under for last year. So they are taking into account what is going on with that. Now, looking at the market here, well, corn is December is back to unchanged. Look at that. Even though the number was in the tank bearish, the market isn't buying it so much. We've bounced.
Kind of compare this thing out, Sterling, and a lot of people, back when things were very dismal at the very beginning of COVID, when there was the major outbreak in China. China was shut down. To kind of give you an idea of how big that 2.2 billion number was, we were hoping for 2.2 billion back in 2020. There were some estimates that I saw of corn carryouts at 3.1, 3.2 billion bushels of leftovers. Now, keep in mind, you're shutting down China. You're shutting down other places in the world. That was when corn was around $3.50 on the board. So we're, 2.2 billion is definitely not a $3.50 trade, but it is a big, big number, one that we have not seen since 2020.
Yeah. Now the big mover. Look at my chart that I've got up there, Brooks. That is Kansas City wheat. We are up 48 cents a bushel. The Kansas City-Chicago wheat spread, let's see, what do we got? 23, that's 25, up 75 cents this week.
Well, give the soft red wheat guys some hope. Flip that Chicago screen on there. We got to see some green sometime in Chicago, hopefully.
Well, the Chicago's getting drug along kicking and screaming. It doesn't want to go up, but it's being forced in here. You can see we are, we were trending lower.
Hey.
And we had a nice little descending wedge, which is kind of a bullish pattern, and we have broken out of that wedge. So this may be the thing that can change the tune and the tone in the wheat market here, at least for Kansas City wheat.
Well, that would definitely reflect what we're seeing in the company, and I said this in the opening. minutes of the meeting is, our preponderance of claims are coming out of that wheat market in the Southwest. And, there's going to be a lot of wheat that's not harvested, a lot of wheat that's zeroed out. And so it sure looks like the market listens.
Yeah, and I'll have to dig around, and in tonight's report there'll be, the winter wheat numbers and everything specifically about how much they've cut production. But look at this corn market now. We are for December up 3.5. On July, we're up 8 3/4. So again, the sell the rumor, buy the fact was the right call today.
Looks like a good one right now. Yeah, 2.2, the number itself cannot be looked at as anything bullish, but the variables that we talked about going in, I mean, it's that time of the year, and there is enough uncertainty. We've got to grow that big crop. We've got to plant that large amount of acres. We've got to see the Black Sea continue to contribute to world exports out there and world demand. So there's a lot of ifs when it comes to that number. I think the market's kind of expressing that today.
Yeah. I think we traded down on the 181 spot 5 idea, but it also sinks in that beginning to feel a little bit like Brazil. They always put out these big guesses for numbers, and they never happen. The USDA with the corn has been pushing this 180 idea for a few years now, and
Right.
we have not really been able to do anything to get over that number. And again, we're far from perfect weather. The weather here, we're still in a drought, and you're not going to have a record yield if you have problems in Nebraska. That is just not, that just takes it right off the table.
Pretty tough. You've got to have that consistency across the board. We've seen problems in Kansas with early planting, not getting corn emerged because it's so dry. We've seen some places in the Delta where they got up to a little bit of a late start and had some rain. The big downpours, most of it's been local, where there's some spotty replant, spotty prevent plant claims out there. But for the most part, when you come across the bulk of the I states in Ohio, things are good. But to Sterling's point, you're going to have all cylinders firing in line for that 181.5.
Yeah. And a little good luck along with it. And it's an extremely high bar. We haven't talked about soybeans at all because there isn't much to say here. The soybean number was exceptionally bearish, and soybeans pretty much trading about where we were when the report came out. We're a couple cents lower, but not a lot of big surprises there, at least on the surface with the soybeans.
What seems crazy about that to me is, with the printed acreage number out there on soybeans being a little lower than what I expected it to be if you use that at face value. But if you look at the overwhelming demand for these soybeans, you mentioned the soy diesel. Exports don't look to slow down at all. Domestic, you mentioned domestic crush margins are really, really strong. One thing to keep in mind here, this market doesn't give us opportunities. These early planted beans, if you're in the Delta, if you're in the Ohio Valley region, and you've got beans that come off in September, that's a plus. You've got a double plus if you've got beans that come off and you've got a processor market. The world right now look to Argentina for a lot of their meal supply. Argentina, horrific drought last year. If the U.S. can supply meal to the world in August and September, those beans are going to be at a big premium. So there's still some optimism on beans out there.
Yeah, and good on people who can get those early planted beans and deliver before the main harvest, because you are going to get paid for those beans, and you're going to get paid generously. And here, old crop beans actually have now ever so slightly turned positive. So we are, most of the gains are sticking.
All we've got to do is talk bullish news, Sterling, and the market turns. We better just keep talking.
Yeah, well, we can talk all day, and we'll get all this stuff limit up by the close here.
Well, Sterling, I'm going to let you kind of take us out of here and wrap us up. I apologize for the inconvenience of broadcasting live from the Atlanta airport, but it's kind of what I was stuck with today, and you might have been entertained by my background along the way. I don't know what's behind me, but I'm going to sign off and let you and Ashley take us away. I appreciate everybody joining on.
And let's see if I can get my camera to work here. And we have the ghost of Sterling past. Some things that I'd like to point out. The numbers these are first numbers. These are preliminary numbers. These yield numbers were based on USDA trendline estimates from February. The market clearly is not taking them that seriously right at the moment. In terms of global numbers and everything else, read today's DMO. These reports have a lot of moving parts in them, and it's going to take me an hour or so to parse it out and get all these sorted details. But all of it will be covered directly in today's DMO, so you can read all the details about it. Also, make sure you sign up for the podcasts. Those are on Tuesdays and Thursdays. We have very mechanical reports. We talk about exports and everything else, not a lot of market commentary. This is a good way for everyone to follow and keep up. Make sure you get these out to people. We've gotten almost 100,000 downloads of it now. So it is popular, and it's something, it covers every market, and it's quick and easy to digest. So with that being said, we'll take one last little look at the markets here. And we've got old crop corn up 3 1/4, new crop down 3/4 of a cent. Old crop beans positive, and we still have Kansas City wheat up more than 40 cents. So all in all, an interesting report. We did induce some volatility, and we may have changed the composure of the wheat market a little bit, and that can be supportive, at least from a speculative buying point of view, to the row crops. So with that being said, I'd like to thank everybody for their time and joining us. If you have any questions, certainly feel free to reach out, and everyone have a great weekend.